Hey, so there is so many changes that are going on right now relative to taxes and this Family Relief Act and Tax Relief Act, and I just wanted to talk about a few things. I've got some notes here that I'm going to be referring to, and you've probably heard about a lot of the things that have happened, but there's a lot of information coming out at one time, and I want to be able to help and be a resource for you while all this information is coming out. So the very first part of this is the recovery checks that are going to be handed out. Basically, these recovery checks are up to $1,200 is going to be put into your hands sooner than later. If you're filing a joint return, you can get up to $2,400, and there's obviously income limitations that are relative to this. So this is the recovery rebates for individuals. These checks are going to be limited by income if you're $75,000 of income or lower. If you file single, $150,000 for married filing jointly. So $2,400 if you file jointly, and then $500 for every child. And this is going to be based off of the income level that you reported on your 2018 tax return. So the 2018 tax return is important. It's phased out if you make over $99,000 single and $198,000 for married filing jointly. So there is a phase out, and like I said, it's going to be based off the 2018 tax return. So if you are married filing joint and you make $100,000, it looks like that you're going to get, and you have 3 children, it looks like that you're going to get $1,500 for your children, and you're going to get $2,400 for being married filing joint. So that's $3,900 that's going to be handed to you as a result of this. So if you have little to no tax liability, then you are going to be eligible for a minimum rebate check of $600, $1,200 if you're married. So there's just so many different things that are happening here, but that's basically the long and short of the stats of these recovery checks that are going to be issued. So it's based off your 2018 tax return. If you paid attention to the news at all yesterday, you saw, and I was very excited about this, that the filing deadline has been extended from April 15th to July 15th relative to COVID-19. So there are changes that are happening pretty rapidly here. And this allows you, all individuals, to postpone any estimated tax payments that are due as well until October 15th, 2020. So what does that really mean? This means that you do not have to file your tax return on April 15th. You have until July 15th to file your tax return. You also do not have to worry about making a payment on that tax return. If you have a payment due, that is going to be delayed until July 15th as well, and you won't have any penalties or interest related to that payment that is due. Also, throughout the year, you're supposed to be making estimated tax payments. What they changed relative to that is that you don't have to make any estimated tax payments. You won't have any penalties or interest related to those tax payments as long as you make them by October 15th, 2020. Now, these delays were for anybody who owed more than $1 million, which that doesn't affect a lot of us. I don't have that problem. I don't know about you, but I don't have that problem. So you will basically have until July 15th to file your tax return as well as make your payment on your tax return. There's another provision in here relative to retirement funds. This is really interesting relative to retirement funds. So if you've ever taken money out of your retirement, you get a 10% penalty, right? You get a 10% penalty if you take that money out early. Now, according to this Relief Act that just came out, you can take out up to $100,000 of qualified retirement accounts without the 10% penalty, as long as it's made to a person or an individual who has COVID-19, has a spouse or a dependent diagnosed with COVID-19, or experiences adverse financial consequences as a result of being quarantined, furloughed, laid off, having work hours reduced, being unable to work due to a lack of childcare for COVID-19, closing or reduced business hours relative. So you can pull $100,000 out of your retirement account without the 10% penalty, which is pretty huge, in order to get some money so that you can survive and thrive during this time. So they are abating that 10% penalty that you normally have for getting your retirement out. One thing I want to mention about that is this might be a time where you want to get your money out of retirement. It depends on what it's invested in, but getting that 10% penalty waived is huge. That's not for everybody. It's only if you're affected by that. Another provision in this Relief Act that just came out, this just happened yesterday, is a provision to encourage Americans to contribute to your churches and charitable organizations by permitting them to deduct up to $300 of cash contributions, whether they itemize their deductions or not. So whether you itemize or not, you're going to get an additional tax break for up to $300 of contributions that you make to nonprofit organizations. So that's pretty huge. Also, if you're not familiar with this, but every year, charitable contributions are limited to 50% of your adjusted gross income. But for 2020, it is not going to be limited to 50%. It increases the limitations on deductions for charitable contributions. So that has been suspended. So you will be able to you could deduct 100% of your income in 2020 giving to charitable contributions, which I think is really cool that as a part of this Relief Act, that we are considering these charitable contributions. We're considering contributions to our churches, to nonprofits. We're being incentivized to continue to give to those organizations because it's going to be very difficult for them to survive during these times. But now we have a tax incentive to be able to do that. I think that's awesome that they included that in there. All of this stuff you can look up. I just wanted to come on here live and just discuss some of these things that has just happened so you can be thinking about this, so you can be planning for it. The delay in estimated tax payments for corporations is big as well. You're going to have until October 15th to make your estimated tax payments. That's big. Employer payroll taxes. Now this starts to get a little bit complicated, but this is really interesting for your small business owners out there. If you have payroll, if you've got people on your payroll, or you're a self-employed individual, you are going to be able to defer the employer share of your Social Security tax until the next 2 years. You're going to be able to delay that the rest of the year, defer the employer share. What is the employer share? The employer share is 6.2% of your payroll taxes. So that requires that if you defer this payment, it'll be paid over the following 2 years. This is big. So if you have a payroll of $100,000 each year, this means that you're going to be able to defer $6,200 to the next 2 years. That's big for a lot of employers. This Social Security tax, it's a pretty big tax when you have a big payroll. For $1 million of payroll, that's $62,000 that you're going to be able to defer in payments that you normally be making this year. You'll be able to defer those into 2021 and 2022. So that is a really big relief for a lot of employers as far as like deciding whether to keep people on payroll or not. Another provision of this Relief Act, and if you have any questions, I'd love you to throw up some questions here. I don't know why I can't see comments sometimes, but anyways, if you got a question, please throw it up there. And if you have a question later relative to what I'm talking about, if you're watching this back later, please write down your question and I'll respond to it and answer it. Also, modifications to net operating losses. This is really, really interesting. So they're going to allow you, typically net operating losses in your business are only able to be carried back 2 years or forward for 20 years. This provision in this Relief Act is going to allow you to take your losses from 2018, 2019, or 2020 and carry them back 5 years on your tax returns. And the reason I want to jump on here and tell you about this stuff is while we are quarantined, if you own a business and while your business is having all these significant changes, if you had a large loss in 2018 or 2019, you're going to be able to carry that back for 20 years. So you will be able to amend your tax returns, change your tax returns, carry that loss back and get money immediately. These are things that you can be doing, this action that you can be taking during this time, which I encourage a lot of people to be thinking about. What actions can you take? I've been taking a lot of action this week, finding out about this new information, going live a lot more times. These things are important to people. You can carry it back 5 years. That's very interesting. It's going to allow you to capitalize those losses and offset them with income that you had in those prior 5 years. Another modification is going to be on losses for corporations. It's going to allow you to do the same thing. You're going to have a credit for prior year minimum tax liability of corporations, what's called AMT. They're going to allow you to take advantage of any prior year AMT tax liability that you had and utilize that on your taxes. They're going to make it available as a refundable credit over several years. That is big, big, big time. The limitation on business interest. You typically are not able to write off any interest expense that's over 50% of your taxable income. They are eliminating that. There is no limitation on that. That is a big deal as well. Just like the charitable contributions not being limited, that does not limit your business interest expense that you're able to take. It is going to eliminate that limitation of 50%. I'm sorry, on there it's increasing it from 30% to 50%. I'm sorry about that. Technical amendment regarding qualified improvement property. This is really interesting. So for hospitality industry, you're going to be able to immediately write off costs for improving your facilities instead of depreciating those improvements. You're going to be able to immediately write those off. This corrects an error in the Tax Cuts and Jobs Act, not only increases company access to cash flow by allowing them to amend prior year returns, but also incentivizes them to continue to invest in improvements. So this is for the hospitality, especially in the hospitality industry, but for businesses across the board. If you've made improvements in your business and you have had to depreciate those over a period of time, now you're going to be able to go back and write those off. That is a big, big deal. Trying to think if there are any other things that are going to be relative. So that's just a few points that is relative to the Relief Act that this just got approved yesterday. The biggest thing is these recovery checks that are coming in. That is going to be affecting a lot of households, anywhere from $75,000 if you're filing single, $150,000 if you're joint. You're going to get a $2,400 check as well as $500 for every child. So a lot of these things affecting small businesses, affecting individuals are all going to be coming out. This is already passed. This is why you need to be consulting your tax professional very, very soon. Not only to file your tax return, which now has been delayed till July 15th, but a lot of these provisions that are in this Relief Act is going to allow you to amend prior year returns. It's going to allow you to take advantage of this right now. So if you've had any leasehold improvements over the last 2 or 3 years, if you have estimated tax payments that are due, if you have retirement funds that you want to pull money out of, you can get that 10% penalty waived now. These are all different ways that you're able to help yourself right now, get some cash into your pocket. The other big thing that I talked about is a delay in payment of employer taxes. This is huge for a lot of employers, that you're going to be able to forego, not have to pay the employer portion of your Social Security, 6.2% of your payroll in 2020. You don't have to pay that. It's going to be deferred for the next 2 years. It's going to be deferred into the next 2 years. So you don't have to pay it this whole year. You're going to be able to pay that over the next 2 years. That is big. So a lot of these provisions will be coming out. Please tune in to a lot of the different lives that I might be doing. If you have any questions, please put them below. I will answer them after I get off the live, or if you watch this back later, I will answer them as soon as I see them pop up. But please stay tuned to all these different relief acts that are coming out. I'll be giving you up-to-date information on that. And I appreciate you watching this. Another thing that we're helping our clients with right now is these SBA loans. If you're looking to get an SBA loan, we can help you make that happen. It's something you can do on your own, just like you can prepare a tax return on your own, but we want to help you fill out that application and get that submitted so that you can get some money to put into your business and invest in your business during this time. Thanks for watching. I hope you have a good day.